up, boys and girls, ladies and gentlemen, day traders, plaza swing traders? Hope you guys are doing absolutely fantastic. I see you guys piling in nice, bright, and early on a big day. We got some non-farm payrolls. We got Al in the house, though. Good morning to Albert Bell. Good morning. We got Bill, Brian, Cindy. Good morning to Eric. We got Eric with a K. Good morning, Greg, Gilbert, Jay, Linder's in the house. Good morning, Joe. We got Joseph. Good morning, Liza, Lucian. Nancy's going to rock with us today. I love it. We got Richard Jet in YouTube land. Daniel, Ivo, good morning. All my lurkers in the back of YouTube. That's okay. I still love you. Hit that like and subscribe button. It just helps out my just ego. That's it. That's all. I don't think it does anything for the algo. I'm gonna be the only person on YouTube that says I think the like button is just fake. It's like that push button thing when you cross the going across the street, you push the thing so the light turns green. It doesn't ever turn green, but it's okay. Just hit that like button. But yeah, we had non-farm payrolls today. So the number came out. We beat, and I see Richard Jet in YouTube land said, question, what are the payroll numbers looking at? I'm guessing it's what are the payroll numbers? So that's non-farm payrolls. So we beat by, I think it was like 46,000 jobs over estimate. It's a lot. It's a lot. That came in pretty strong. So the market is interesting. That's why I do this, because it's interesting. For the economy, that's good news. That means that there's more people with jobs. For the stock market, right now, people are taking that as a bad number. There's times in the market where good numbers are good numbers, and good numbers are bad numbers, right? If the economy is going through recession and people are like, oh no, how do we can't get jobs, there's no work for anybody, people are hungry, people need to eat, there's no food, there's no water, there's no money in the pockets of anybody, all the saving accounts are then to see that number increase is typically a good thing. Always seeing more and more jobs, more and more people have work, more and more people have income, stability. That's a good thing for the economy. So that's good for the economy. But now we got to bring that back to the stock market. We got to bring that back to Jerome Powell, who's got, as chairman of the Fed, they got two goals. That's it. All they got is two. You got two jobs to do. That's it. You got to keep inflation down or at a steady pace. Inflation's okay, but at a steady pace. And you got to keep employment high. And their job is to balance the two of those. So the big issue that we've been going through 2023, but really 2022, 2021, is we saw inflation just skyrocketing 9% higher. I think was the highs of it, but we were pushing high. Other countries didn't actually even hold up as well as us. Some of those countries were sitting at like 15% inflation, things like that. So you have to battle. And one way to get inflation down, well, if less people have money, less people are willing to spend, the companies that are making those products, they're going to have to compete for your business. They're going to have to lower those prices. And that brings the pricing of things down, brings inflation down. And you're just kind of like, once inflation comes down, then you start building up the economy again, right? So it's a fine line that you're walking on, right? You're walking that tightrope. So Jerome Powell he came out with a pretty definitive statement, which is why what was it, 3 weeks ago, 4 weeks ago, something like that he was looking to not only just maintain rates, although he said, yeah, probably longer than expected, but essentially they were, even in the Fed meeting, the notes that came out, they were pretty much on the consensus of we're looking for rate cuts this year. And when you have rate cuts, that means money is cheaper. So money is cheaper. Again, that's more money that you're able to spend. You can borrow money cheaper, throw it in the economy, but ultimately that increases inflation. So it's a sticky situation, because if you have the more jobs out there, more people working, that's going to be a tougher way down to bring to the Fed's terminal rate of 2% inflation when the economy is absolutely ripping. So again, for overall economy, good. For Jerome Powell, and the markets will kind of take it at different points of how they want to. We just ran nonstop on the basis of we think the rates are finally getting cut. Right? And that means more. If the rates are getting cut, why leave them in treasuries? Right? If treasuries rates are coming down, why leave it in a money market account when we went through a 10-year period where they were pretty much paying you nothing? So would you rather your money sit into a bank not even close to outpacing inflation, or would you rather take your money, put it into a risk on asset, try to collect some dividends, try to collect some yields, try to collect some growth on some companies? That's the time where you want to risk. That's why we saw the crypto boom too, right? Even lately. I mean, well, we still got the crypto ETF coming out supposedly, and there's some news. But even before that, when we just had that back in 2020, what were the rates looking like? What were the treasuries looking at? What were the money market accounts paying? Next to nothing. So is that the time where you could just borrow money pretty cheap, put it into maybe a riskier asset class like crypto? Typically, that's the time, right? Money's cheaper. So that's where the numbers. But now, again, the market's not going to love that number of increased non-farm jobs. They're not going to love it. But we do have to look down the road to next week. We got CPI on Thursday. We got PPI on Friday. So we still have a little bit of a parachute. If inflation is still coming down, and then the market could look at this entire situation and go, you know what? Yeah, we still have growing jobs, growing economy, but the inflation is at least steady. It's at least maintaining. That could be the parachute for this market, and that could help kind of rally us back. So we still have two key points of data, and then we're going into all of the earnings. We've seen a lot of forecasts, not a lot, but we've seen some forecasts already come out to the downside of like what companies are expecting to do and lowering guidance. And then we've seen a bunch of downgrades. Actually, we'll get to some of those today, but the big one was Apple. We saw it come down from, we were sitting somewhere around 192, 196, somewhere in that zone, and they're coming out saying, yeah, downgrading it to 160. The other one that got we'll take a look at today is Palantir, just got a downgrade as well to I think $13 a share. So we're starting to see some talking heads on Wall Street, some of the analysts, which take them with a grain of salt because you just don't know how they get incentivized sometimes. But we're starting to get leaks of a little bit more fear in the market than we had just the euphoria of 2023. So that's where we're at with those job numbers. That being said, interesting enough, if we go to a 3-minute chart, we were already gapping down right this morning before those numbers even came out. So truth be told, I mean, we're not doing that bad on those numbers. We've actually recovered a little bit. This is my first out of 2023 so far. The first really buy the dip I've seen. Right. So we gapped down previously, and we'll see where we close out. We'll see how the rest of this day marks off. But we were already gapping down. Those numbers came out. They hit. People didn't like it. And this is the first time so far we're seeing a little sign of hope, at least by the dip. And keep in mind, for everybody who's panicking, I don't think we're really in panic mode, but for anybody who's a little bit worried about the stock market pulling back, and yeah, we've had pretty much since the ball dropped on Times Square, we've had nothing but red days, like down days in the market. So all of 2024 has been bearish. That's okay. We still, first of all, we can still drop a lot more and still be technically bullish, but we've gone nothing but up. Like you can't sit through a couple of days of red and not forget that you've had recently just nonstop bullishness. So I think this is more of a correction than a real red flag for recession so far. I haven't seen anything really different, but I think this is still just a pullback. I think there will be buy the dip opportunity. I'm not sure where it comes. I think we are still relatively high overall in the market, but we'll see where we go from there. All right, but we do have a little bit of a small little gap down today. So this is a retest gap. If we open here, we're gonna have to see where we come in, but I'm not seeing any. We're kind of, I mean, I want to say dead smack in the middle of my target to the high side. At least the last VPOC would be 468.58. Do we close there? I'm not sure. That seems like it's a tough feat because we're still gonna have obviously where we come in. Where we closed that yesterday was somewhere around 467. I think that's going to be a tiny little bit of resistance there. I'm looking at probably where we opened yesterday. That's 468.30. That's probably going to be another decent spot for some kind of resistance, especially with some fear out in the market. And then if we do shoot pretty high, yeah, probably maybe we could get to that 468.59. But I think that's a tough one for today. unless these bulls really come out. But I don't see the catalyst that would really get us there. To the downside, I'm looking for really not a lot in the way holding us back. We're kind of in this low volume area at this point, almost at that one last spot that we got to hang on to. Otherwise, we're coming down to somewhere around 464, 48. Let's see if that matches up anywhere with some of those VPOCs. 464, 69. So that would be my target to the downside. We've had nothing but selling, obviously, this year. So can we get at least some people who might have gone short, taking some profits, some gains at open? I think that's most likely the case. I think we rally a little bit and then watch later in the day, see if we come down and just drop. I don't think we open that morning bell and the trap door opens, we all fall through. I'm not sure, but I would rather bank on maybe a short term bounce at least, and then see if the bulls are able to actually hold that. We shall see. Happy belated birthday. I appreciate you. All right. Let's take a look real quick at the cues. We got the cues. Pretty much same story. Nothing really too different. Lots of red days since 2024 came in. This is another retest gap. Very similar, I would say, to yesterday. In fact, yesterday we actually had a little bit more of a further drop than what we are. I mean, we got 18 minutes. We'll see how the day goes, but we had a little bit of a larger gap down yesterday. I would expect something like this, retest, and then see if the bulls want to hold today. They really didn't hold yesterday. We actually did close lower than we opened. And I'm still looking at this little support, 395.47, somewhere in that zone. So we're not too far away from that first one. If we give that up, the next spot down for us could get a little bit more ugly. That's 392.19. If you're looking at futures, by the way, we're a quick skip, hop, and jump away from the exact point where we had that Fed meeting and Jerome Powell came out and pretty much declared that we are going to start to lower rates. And just back to that other point too, the question is not if he's going to lower rates, because he said he's going to. Now the speculation is, well, how many times, how big of a rate cut are we getting, and how many times is he going to do it? The market's putting it on maybe 6 to 7 cuts this year. That's where I would probably have a little discrepancy with the actual market, what they're seeing, but I think it's probably going to be a lot lower. The first time we see Jerome Powell, I believe, is January 31st. I don't think he's going to touch rates then. I think most of the market doesn't think. I think most of the market probably says, let's see what happens in March is probably the first day, but we'll see. TLT. So this is another one we do have to continue to watch. Bonds are coming down. We saw that over here. This is where bonds just nonstop fell. And it's going to be very tough for the markets to post any kind of bullish rally with the bonds not really cooperating and seeing eye to eye with the actual stock market. So we're going to need this to come back. Good news for us is this technically is a retest gap as well. So maybe we get a little bounce here, but again, even with all of this, I mean, pullback, it's not a lot compared to the rip we just had. Like, we cannot forget that we just went massively bullish and not expect that we can't get a pullback. So again, I'm still bullish on everything. It just the question is when. Do I really want to be a heavy buyer yet? Probably not. Be very selective until I see something or much bigger drop that we could make some decent coinage off of. STZ, what's up, Win? STZ Constellation Brands. Kevin says, I like it. I like it. I love it. And I want some more of it. That is a pretty decent gap. Is this earnings? Yep. So they beat earnings per share by 17 cents, 5.83%. And then we did miss on revenue, 66 million. What is the what's the dividend on this? STZ dividends. 1.4%, 1.47. That's a pretty decent gap. I'm not really seeing anything in terms of I think targets to the higher side. There's going to be a little bit of consolidation we got to get through in this zone. Otherwise, targets on this one probably takes us to about 247.67. This is where I would be careful on this one. I would like to see a little pullback first. even though it looks like, and it doesn't have to be huge. Give me that little red high wave candle or something. But the closer we get to like 243.81 would be better. The reason I say that is just this is your bullish candle. Then you have 2 inside days, so really nothing changes the game here. And I think we got to act off of this candle as opposed to those 2. So see if this one pulls back a little bit, but the closer we get to that 243.74, I think gives us the best opportunity. Really looks good for a swing trade though, especially if we get that pullback. Jay says it's spready, hard to day trade. Yeah, I'm gonna run into that issue. But even throwing an order out down there somewhere potentially. Yeah, watch the spread on it. I don't really day trade this one, but even for a swing trade, it's got some room. Even longer term, double bottom that could be higher lows. Short term, double bottom, higher lows. That could have easily been a very stretched out bear flag. Doesn't look like it's really holding the bear. It's not really breaking down, so that's decent. I do like that one. We got Costco, COST. Costco. Yeah, a little bit of gap up. At least it looks different than the market. So we are gapping up. About $6 is news on this one. Oppenheimer increases price target on Costco. Buy it now. Limited time. $6.95. So $20 upgrade on that one. Nothing too crazy. $20 upgrade from where they previously had it. Is that a really difficult target to get to? Probably not. We do need another new higher high. Yeah, all right, so decent. We got probably upside for today, maybe 660, just under 660 somewhere. Again, a little bit of a retest gap. I've got a few levels of support in between it, really just 2. But yeah, see if we get a little pullback on this one. 652.94 is where I would look, and then if we could get a full on retest into 649.09, especially if the market's a little bit weaker, we are up there. I mean, we're definitely up there. Good news on this one is we're still above all moving averages. We're still progressing bullish, but we're pretty much at all-time highs, so be careful of that one. Otherwise, yeah, if this thing falls back far enough, maybe as close as possible, I think to 650, that would be a decent location to try as a trade. I don't think I would be long-term investing this close to all-time highs. George, who's on host and panelist, says Tesla. Still just hanging out. Still inside of not yesterday, but the day before. So we got to watch these levels down here. There is a tremendous amount of support, but that could come all the way back down to 234.42. That's where my bearish case would be. I'm not sure if we get there today. Tesla dropping $3. I mean, $3-4 would be not an outrageous thought process to have. But yeah, what I don't like on it, and I'm in this thing bullish with some calls, but is that fact that we close back into here. However, if we do get a nice, decent day today, even, I mean, let's flip this thing to a weekly chart. It doesn't look as intimidating on a weekly chart, right? So this is just, there's your breakout. All of this is a retest. We're going to have to see where this thing closes. But for day traders, there's not really too much edge, bullish, bearish. We're going to have that resistance from that current downtrend. We got there. We got slightly above it yesterday, and then we just pushed right back into it. So not a great close yesterday, but even a worse close the day before, and we just kind of maintained that level. So nothing too crazy on that. Do we have news? Tesla labor dispute, Sporks, Nordic sympathy strikes. Tesla recalls, yeah, so this is Tesla recalls 1.6 million cars in China to make autopilot fixes. Don't they just update your software? I don't really understand the I don't really quite understand why you have to bring the cars back, but I don't know. All right, we'll take a look at Plug, ELUG. Plug is still hanging out. The $5 range is gonna be tough. I do have in one of my 10K challenges, one of my brackets, I'm sitting on this one, and as soon as I hit the buy button, I was like, that was stupid. I should have waited. I could have easily made already the 10% that I needed, but I had to. I got too high. I thought we were gonna make that break, but I'm still sitting in this one. They might have some news coming out shortly in a few weeks. where they're opening a new plant, should be up and running, that they've been talking about for a while. So we'll see if that brings it any bullish edge to it. But little gap down. This is a retest gap from yesterday. Again, I don't think yesterday's candle is too crazy. More so this candle, and we're definitely inside there. So probably gets a boost somewhere. Otherwise, we already came down to 417. Watch that level, 417. See if that one breaks. If it breaks, we'll probably head down to 411, maybe even back to 396 and 383. Other than that, though, I'm still holding. I'm still waiting, and it's. I think I'm going to be in this one probably for a minute. I think I got jumped the gun. Otherwise, nothing too crazy on plug. They really need a good catalyst, something that people get excited about. Let's take a look at Palantir, though. Palantir did get a downgrade from Jefferies. That was to $13 per share. I also have some put sales at 15, and I got till February, I don't know, 16, 19, whatever day it was, but big support somewhere around 1544, somewhere in that range. So we'll see if we get any type of bounce there. Let's see. Yesterday's candle was a bullish engulfing candle. We're probably trapping some bulls on this one. Probably trapping a couple. See if we. I don't want to short this one out of the gate. See if we get a little bit of a retest, just because we did have. I mean, we've been in a miniature little downtrend here. The closer we get to 15, I think the more excited people might get to buy it. But 15, 14, somewhere in that zone, I think would be very strong buy spots. But we'd have to kind of see. For today, it's going to be a tough short, knowing that 1545 is right there below you. And I can make a case that some of those shorts might want to look to cover, especially the closer we get down to that 15 range. So the day trade might be tough. I might have to wait for some kind of like double bottom or double top somewhere if I want to take either direction on this one. But otherwise, I don't think I have really much edge after already that it gapped. Lulu. I mean, we're high up there. We're high on yoga pants. Yeah. And we are back below the $500 mark. We got a little support from the 20 on the daily. We also got a decent VPOC holding spot somewhere around 489, 44. Otherwise, we're just really in this consolidation box right now. So, my guess is we just continue to chop until we get some kind of news, either direction, or we start breaking down some of those key moves. This would be a decent one. If we break down that 20, we almost do some kind of 10 EMA on it. That would be decent. MU. Right at some kind of a decent support. Yesterday was a gap up, so we had at least at open a little bit of bullish sentiment. This all came back for the retest. Now this is almost another retest gap from here. This MU, I think, gaps, let's say frequently, but a decent amount. And right now you're opening right at the 20. You got really good support right here. So I'd want to see 81.67 hold. This one might be playable for the retest on this one, play bullish until some of those numbers break. But yeah, even to the upside, we have not yesterday, but 2 days ago, we have a VPOC that's 82.18. If this candle breaks, though, I think if this candle from 2 days ago, if we start breaking the lows of this one, then I think we get a little bit more of a downward trend break. Otherwise, we're still in chop zone for right now, I think. HD, Home Depot. I think John Alonso called this one pretty spectacularly. Yep, we're looking for that little bit of a breakdown. We got that. I think this one continues. The next spot, at least, I think 333. This would be one that I'm going to throw on the list. Why do I not even have this one on my normal watch list? That's crazy. That's so crazy. Yeah, we got HD. We'll throw up there a little bit higher. I would like to see a little bit of a retest that open, but we do have targets that could be a little bit lower than this, about $4, which is quite enough for us to get some kind of R's on. Yeah, we got about $3 for the first one, and then the second one takes us to about so $4 further down, I think, is where we have to come. But at minimum. So I would love to see this thing get bought up and then watch it. Probably not the first 10, 15 minutes, but maybe after that we get that rollover. There's definitely some selling pressure going on Home Depot. PayPal. Uh, Probably comes lower. Still inside day. So for trading, I mean, on a trading day, not a lot of edge when it's inside. The trend right now is definitely some kind of pullback. I watch this $57 range though. It's like 57.40. I think we're gonna have to hold that level. If we draw a fib, even see how far this thing pulled back. This is not exactly to the penny. I think the bottom is off by a little bit, but 50% retracement. So that takes us somewhere around 57.18. We're gonna have to hold that. Obviously, we're looking at $50 to $64, and we're getting this little bit of a pullback. So this is our 50, and then 55, 58 would be the next level down, at least in terms of fibs go. But we should have good support right around here, right around that 50. So see if this one wants to drop a little bit. We got close to it with that wick yesterday, but I still like it bullish long term. It's just a matter of where do we continue to buy? And honestly, anything under $60 is to me a no brainer for buying it for the long term. Sit, wait as long as you got time. When I say long term, it's not like 2 hours; it's like 10 years. So I've got some time on it, and this is around the spot to acquire some of those positions. Can it go lower? Yeah, I'm not trying to pretend I could call the bottom on it, but I think out of all the fintech companies, you have really one that's making profit, and that's PayPal. So I'll take it. And yeah, but that's got to be a pretty hard line in the sand for day trade. So the closer we get to 57.27, that's where I'll watch it, even for a day trade purpose. Put that one up a little bit higher on the list. I got a minute and 30 seconds. That's where Mara come in first, so we'll go through that, and then we got Baba too. And I apologize if I missed like 35,000 other ones. Mara just kind of hanging out for right now. Nothing too crazy. Inside day. Look for support for right now. Around $25, 25.06, and then you're gonna hit resistance probably about 26.81. But watch Bitcoin and watch Coinbase pretty closely too to see if there's any crazy breaks one way or the other throughout the day at least. We got BABA, so that's a gap down. Technically retest gap. I'd go more of this. This looks pretty bearish. I'd go off that green candle as opposed, and watch this level right here, 73.82. If that one starts to break, we should get some decent room down to like 72.56. And then a little bit longer term, maybe about 71.33. So watch Baba bearish today. We got 38 seconds. Okay, we got NVIDIA, NVDA. The lightning round. We got NVIDIA with a little strange gap up. Okay. Looks different in the market. We should have, I mean, we're going to have all of that as some type of resistance on the way up. So I don't think it's going to be the easiest long, but I would say long nonetheless. See if this one wants to pull back. See if we can get it as close as possible to like 482.12. If we could do that, yeah, my final target, if this thing wants to run, probably about 497 today. That would be a pretty outrageous day. Maybe we get caught up somewhere around 493.55, but that's still a decent amount of range on it. So let's see if we get some kind of high wave or something indecision out of the gate, and we can take a break of it. But everybody at YouTube land, if you have not already, I mean, I don't know why, but hit that like and subscribe button. Make sure you guys do that. Check out reallifetrading.com. We got a lot of free education classes, all that stuff, mentor groups. And I'm teaching the beginner class. I'm teaching a beginner course next week starting Monday. So make sure you guys check that out. Free to sign up. It's a freemium, 0% off. I'll give you the Groupon rate, but just go to Real Life Trading. You'll be able to see the sign up sheet there, and we'll run through the stock market for you guys there as well. Otherwise, you guys are incredible.